up getting. So remember, we work our way through from the headline. The first thing happens is that we get a headline. And the headline comes from the weekly crude stocks. Now, I think I've done the Cushing instead. That's a mistake. Obviously, we don't normally just do the Cushing numbers. We do the actual crude stocks numbers. And we can obviously recognize, so we'll get rid of that one and we'll change this to one here. Okay, so let's work our way through this. Okay, so the first things that we have to know is, number one, what was the prior number and what's expected? And then based on the prior and the expected, how strong is the response that we get? The chances of us doing another 9.0 draw would be pretty slim. That's not normal, is it? It's not normal to see those 9 draws coming out of the market here. So we didn't get a 9 draw, but we did get 1.5. And it was against an expected of 1.3. So that's actually quite a bullish number, isn't it? It's still actually a very bullish number. Number one, it was a draw, which itself is bullish. So if you actually start working your way through this, this is bullish and the expectation. So that's kind of bullish going forward from the first phase. So now we've got our first phase. We now know what the knee-jerk reaction is going to be from the first headline, don't we? So the knee-jerk reaction is going to be that. So we're starting to get that as an idea. Now, obviously, as we work our way through this, the idea then is we're going to look at gasoline stocks. Now, one of the interesting things with the gasoline stocks is we've got a way of confirming that as well from the refinery utilization numbers. The gasoline stocks actually drew 2.5. The expectation was for a draw of 1.5. So based on the fact that it was a draw and it was better than expected, we're talking about this being particularly bullish as well. Now, how do we confirm that? We confirm that by looking at the refinery utilization number. And if there's that big a draw on gasoline, we want to know that it's because it's being pumped hard and it's getting moved on hard as well. It's all right if they draw a stock and they don't increase utilization. That means that they are perhaps a little bit softer than one might imagine. But if they're pumping it hard and they're still drawing, now that's really strong demand, right? Does everybody understand the difference? Everybody understand the difference that trades oil? Because obviously they can draw it. That doesn't mean there's necessarily demand, does it? Now, obviously, you imagine that draw is demand, but obviously, if they just simply draw it, it just might be that they've got overstocked. It might simply be that they're overstocked. Well, that's not bullish, is it? So obviously, we try and establish whether that's the case. Well, this is where we had a bit of a problem with this storyline today, because the refining utilization week on week was actually down 1%. So in other words, that's not that bullish, is it? That's not that bullish. In fact, that's on the contrary, that's bearish. And that bearishness kind of negates, to a lot of the extent, that kind of negates that gasoline number. Now, obviously, the other thing that we recognized was that the distillates also drew, and they also drew against an expected build, which is obviously third down the list of information that we need to pay attention to. So we got a boo-boo as well there, didn't we? So when we think about it, this kind of took away some of that bullish shine. This looked like it was a strong, on the face of it, it looked like it was a strong continuation trade north coming out of those numbers. Very strong continuation trade north. But in a little bit deeper analysis, because of this drop off in the utilization, it looks like they're just maybe reducing some stocks rather than pumping the system really hard for that demand to show up. Because the demand seems to be, on the face of it, coming right out of this product, doesn't it? Demand seems to be very, very, very powerful in this one. But I don't know. I think it's got that kind of feeling about it there. So we've got that kind of neutral kind of gut feel coming into the market at that stage, I think. And that's why, you know, it looks on the face of it to be a strong buy trade, and it should be a strong buy trade, but that's why it's probably had a little bit of a lethargic upside, even though a lot of people are looking at those numbers thinking this is a very, very bullish response. You know a little bit more than they do. And obviously, it's not as bullish as you might think. Not as bullish as you might think. So there was reasons, maybe not strong enough reasons to start getting net short aggressively at, you know, at low prices, but certainly reasons to maybe fade into those high prints and just take a little bit of a view on those kind of trades, I think. Yeah, reasonable. And that's kind of what we've seen today. You know, that type of number, normally you'd have expected a very strong bullish pop. But obviously, when you just take an adjustment on that refining utilization number, you're left just a little bit less bullish than you would have been otherwise. And for that reason, a little bit more concerned about banking some monies when you get those higher prints coming onto your screens. We'll be getting started in Classroom in just a couple of minutes, guys.